Just give me 1 second. Okay. All right. So we had a broadcast on just for the live audience, and I'm gonna record on my hard drive just because previously the audio was pretty bad for the live cast. So that's to just upload the actual recording files, and hopefully we will have a better sound this time. Okay, so let's get into this week's analysis. Let me pull out my Evernote because I always typed my weekly analysis right here. All right, so I will just reiterate, the main events. Now, obviously, all this up you can see it from Forex factories and other, economic calendar. But basically, just to give you a heads up for this week, as you can see, over the weekend we have the Euro meeting at Hamburg. We have China CPI. It's already passed. You can take a look at the data. Today, Monday 10, you see it's empty because we don't really have any catalyst today. Market was very, very quiet. Now, tomorrow, don't have much going on, but we do have the MPC member speaks, FOMC member speaks. So more like a central banker speaks. Nowadays, it's actually very important. I understand what's driving the market in this, at least this past 2 weeks, or 3 weeks, had been really focusing on the central banks. And we have seen a lot of central banks shift their position. Now, a lot of folks think the shift are sudden. It's actually not the case because it's really more of a gradual shift, especially for ECB. ECB was very dovish. So for them to shift right now to a more of a hawkish stance, it actually took them a couple months to do so. And their statement was backed up fundamental data. That's why was not really a surprise if you follow through the data for ECB. Now for Bank of England, it was a quite surprise because I don't know if you guys remember, but previously Carney was not that hawkish, and then all of a sudden he became very, very hawkish. Now the trouble for British pound or for UK in general is that the fundamentals do not back up the hawkish Bank of England. So, unlike Europe, where you have a steady uptrend in inflation, employment, and GDP, for UK, the only thing that's in uptrend is the inflation. But we all know that inflation was caused by the depreciation of their currency. So it's not really the economic strength. And it's very notable, like last week, the construction PMI, manufacturing PMI, and service PMI all came out as in line or negative. And the manufacturing data on Friday was also a negative surprise. So not a whole lot positive picture for UK. Now this week we are going to have employment data. Now this is very important because if the employment data once again comes out as a negative number, especially the average earnings, that means the whole economic picture is not really looking well, and that also means that Bank of England really don't have much room. Basically, they don't really have any capability to raise interest rate. I mean, of course, they can raise interest rate, anytime they want, but for their agenda is to stabilize the financial market. It's really a suicide move if they truly raise interest in front of all this negative data, just for the sake of controlling the inflation. As I mentioned last week, I think and I speak with some of my mentors, other people trading, follow through the fundamental pictures that Bank of England is probably just trying to talk up their currencies. Now, of course, pound had been depreciated, so much ever since the pre-exit, and for central banks, if they can basically guide the currency without doing the actual intervention, doing the actual raising or cutting rate, if they can just comment and the comment is strong enough to move the currency market, that would be the best tool to use for central banks. So that's what I think personally, that Bank of England really does not have much room to raise interest rate. Now that will change if we have a very positive employment data. So that's why I think this week the unemployment data is very important, which is gonna come on the 12th, which is Wednesday. So Wednesday is a very happy economic calendar day because we start with UK employment data, and again the focus will be on the average earning. Now, as you mentioned, that's pretty much the whole picture for the all the central banks nowadays. We really put the focus on the wages, same as US. Now, last week we have the non-farm payroll, and although the headline figure was quite positive, but the average earning was still negative. Now, let me pull that up. Just give me 1 second. Right. So as I mentioned, you see, last week, really the main events, as just first of all, take a look at this. You have manufacturing PMI came out negative. You have the construction PMI came out also as negative number. And you have the service PMI also came out as negative. So really 3 consecutive days with 3 consecutive negative data for UK. And on Friday, the manufacturing production, which is a negative surprise. So really a really negative data all week for UK. Now, on top of this negative data, we kept hearing Carney speaks about, they don't have much tolerance for the higher inflation. They kept giving out this kind of hawkish comment. It's completely contradict to the fundamental picture. So that's why it's interesting, because there's really so much the market is going to buy into the central bank speech. And we could see that, in New Zealand dollar a couple months ago, because a couple months ago we had consecutive positive data from New Zealand. However, RBNZ had been very dovish regardless of the fundamental data. Now, at the beginning, market chose to focus on the central bank by selling New Zealand dollar. So every time Wheeler came out to talk down the currency, the talk down New Zealand dollar, we did saw New Zealand dollar dropped. However, it stopped reacting like that after the market realized that the central bank is just trying to talk down the currency. But fundamentally speaking, it is a very strong picture. So the market decided to ignore the central banks, and that happened because, of course, market will always follow the central bank. The reason is because market believes that the central bank use the fundamental data as a guideline. Once the market stopped believing that, and it happened again, it happened in S&P as well. So it happened in RBNZ. Once the market realized, hey, no matter how much good data we have, you just gonna cap talk down your currency. So that's the moment market decide to ignore the central bank altogether. That might happen to Bank of England, because what you see for this British pound rally, let's just say example of cable, it was the very hawkish comment from Carney. Now, it was very steady uptrend, but notably that, just look at price action, we did not break above 130.50. So that means that also you have a very strong uptrend. 130.50, a strong resistance still holds well. On top of that, after this kind of movement, the market wants to see some fundamental data to back up the central bank's comment. And unfortunately, that was not the case. So that's why we start seeing a lot of selling into British pound. So this week, if the employment data is once again a negative number, then you will see a further selling into British pound, regardless of how hawkish Bank of England might be. And that's what I think will happen. So it's really depending on what's going to happen to the UK employment data. Again, the focus will be on average earning. Then we will have the main events for not only this week, it has been the main events for pretty much, weeks already, which is Bank of Canada interest rate decision. Now, ever since Bank of Canada official came out to give a sudden hawkish comment, Canadian dollar had been really bought off. It's perhaps in a very overbought position right now. So this decision is very important. There's two outcomes. First is they're going to raise interest rate. And of course, second is they are not going to raise interest rate. There's only these two outcomes. They're definitely not going to cut. Okay, so what's going to happen if they raise interest rate? Now, first thing you have to understand, the interest rate decision, what comes after is a press conference. There is a 30-minute gap. So this press conference will be the main focus. So what's going to happen to the price action is when Bank of Canada release interest rate, you're going to have really volatile reaction at the release of interest rate. But we are most likely not going to have a clear direction for too long, just because the press conference is coming up, and that's what the market is going to focus on. So you actually, although this is the same catalyst, you actually had several trading opportunities. Now, for me, I'm already in Canadian dollar. I'm short Aussie and New Zealand CAD. So I'm trading into the events. I'm basically buying the rumor, and whether I'm going to sell in the fact, it's really depend on the price action. So most likely, as I keep mentioning, that once you have a catalyst that is realized, you have to ask yourself, okay, what's next? Now, because if the Bank of Canada raise interest rate, unlike other events, you also have the press conference coming up. Now, this press conference might be very hawkish, or it might be very bullish. So you might see a further push down or up to the Canadian dollar at the press conference. That's why it's not necessarily saying that you should just get out at the release of interest rate because there will be no more price action. No, on the contrary, I think the main price action will come at the press conference. So my game strategy, personally, I'm buying into these events, and depending on the price action, I might either break even myself, take a small profit, or get out altogether. And the reason is because although you might be in the right position, but in this kind of event, when it's very volatile, it's very easy to stop you out and only to go to your direction. And that's very frustrated, psychologically speaking. For me, I rather missed the further downside movement than having all the profit vanished only to see the trade goes to my direction after. So that's why I might just choose to exit before the interest rate release. So it's not because I don't think there's more price action. I actually think there will be more things to come, but because the volatility, I'd rather play safe to basically flat or at least break even. But even if I'm break even, I want to make sure I have at least 100 pips of buffer, because if I don't, then it's really depend on your brokerage. Sometimes the price is so fast and you just don't get filled. So that's my game plan. Now, whether I'm going to short again, wait for the retracement, that's really entirely up to the press conference. We want to see like how hawkish can the Bank of Canada be. Personally, my bias is that the Bank of Canada has to be very hawkish to keep this thing going. Because if you look at all the technical chart, it's right here. Right here. Where is my dot? Right here. Everything is really, we high at 135 all the way at 128, and it definitely can go lower, but we should have a retracement. So really, this selling was what came from the anticipation for the interest rate hike. So once that anticipation is filled, also there's still more momentum to come, but not so much. So we should see some strong retracement, and that will be a good chance for me to get into buying Canadian dollar again, providing that if the Bank of Canada is very consistent with their for hiking, because now it seems like they are going to start this hiking cycle. Now, if that's the chance, then any retracement, any basically bearish move for CAD will be a good chance to buy. Then you have Fed Chair Yen testify for on Wednesday and Thursday, both days. But pretty much again, the main events will be a Bank of Canada interest rate decision. Then you have China trade balance and Asian station. Now Thursday you have German CPI. The main events will come to a US PPI and core PPI. Now understand that you actually have two inflation data. One is PPI coming on Thursday and CPI coming on Friday. Which one is more important? Now PPI is more important. Why? Well, I didn't say it. It's just because Federal Reserve had already, has been mentioned that PPI is the data that they are tracking. So this data alone is tradable. You don't need to wait for CPI to come out. That means if you have a very positive PPI, that would start another round of US dollar buying. Vice versa, if you have a very negative PPI or a core PPI, US dollar will be in a more of bearish side. And you have another FOMC member speaks, two FOMC members speaks. Then you have a French national holiday, core CPI from US, and retail sale. And that's pretty much it. So, today and tomorrow, I don't think there'll be much action. Even if Bank of England MPC member speaks, people is not going to trade around this, because even Carney's has started to lose its momentum, just because, like I said, people want the fundamental data to back up with the central bank's comment. So if you start seeing an opposite movement, you might have a very hawkish central bank, a very bearish or negative fundamental data. Then market is not full. Traders are not full. They're not going to just buy blindly because central banks say so. They will really look at fundamental data, because they know that that's what central banks has to report to. If the central banks start hiking or cutting rates, regardless of the data, that's going to be a big problem, because they have to be responsible for the people, basically. So I think things will start getting interesting on Wednesday, especially a jam-packed day. You have British pound and Bank of Canada. And then Thursday, you have PPI from US. Then pretty much will die down again. Okay, so let's talk about 8 curve. So for Aussie, Aussie last week was the RBA rate statement. It was not really an event, because market was really expect unchanged. For Australian right now, things are very, very neutral. But the interesting is that RBA had been very hawkish in the past, regardless of the negative fundamental data. So here you have a picture where you have a very optimistic central bank with a not so good fundamental data. And back then, people or the market chose to follow the central bank by buying Australian dollar. Now, as I mentioned, you only have certain limit for this kind of play, because eventually the market will know that, okay, if the fundamental data is not catching up, then central bank cannot continue to be so hawkish. And that was the case. So this time RBA, people were still expected a hawkish RBA, and they actually came out more neutral. Now, I wouldn't say they're dovish, but more neutral compared to before. Now, I remember in the currency market, everything is comparison. And if you want to trade fundamentally, you have to really understand everything is in a comparison. So I understand a single piece of data has no meaning. You always want to track, a series of data or a trend of data. So because RBA had been quite neutral last week, on the contrary to the previous hawkish move, that's why market decided to sell Aussie. So Aussie has become quite negative or quite bearish because of that, sentimentally speaking. Now, what's supporting Aussie is the commodity. Now, remember the commodity market, we had a quite large drop in iron ore previously. But this week or last week, you actually see a huge recovery in iron ore, all the way from 55 jumping up to 62 right now. Now, iron ore, understand there is two fundamental drive for it. One is the actual demand from countries like China when their manufacturing is booming. You also have another strong demand from speculation. Now, recently, a lot of iron ore demand were coming from speculation, and that's why you have a lot of ups and down movement. Regardless of what kind of data China has. So that also means that any movement up or downside from iron ore might be short-lived because it's really dependent on how strong the speculator is. And don't forget, a lot of speculation come directly from China. And every time when that happens, you always have to watch out for the financial crash down or financial regulations from China. Sometimes they will, just suddenly and try to control the speculative action. They'll suddenly introduce new regulation, or they might just halt the whole market for a day or two. Now, I understand they have the ability to do so. They don't even need to announce it, right? That's a power, or you can say the beauty of the communist country. That you really have a very central power for government to implement the laws or whatever regulation they like. So you have to be careful that sometimes you do see iron ore shoots up or shoots down. But I understand that regardless of a recovery for iron ore, I'll see it was still in a downtrend. That just means that the market right now chose to focus on the so-called dovish RBA or a more flat fundamental data. So I'll see right now it's sentimentally weak. Unless you have continuation of good fundamental data, there's no reason for RBA to become hawkish. Now RBA is very neutral, and we will have to see what kind of data we have. And of course, the commodity micro environment will always push pressure or support Aussie, but right now that's not the case. It seems like market just choose to focus on the RBA. So because of that, I'm bearish. That's my bias. I'm bearish for Aussie, but we don't have any catalyst for this week. That's why it's not really tradable for me. I will only, when I don't have a catalyst for a certain currency, I don't trade it, but I can use it to pair up with another currency. And that's why I say I'm in Aussie CAD short, because I do have a case for Canadian dollar. So I use Australian dollar as a counter partner to trade CAD. So that's my strategy right now. Again, we also have retail sale and trade balance from Aussie, but again, none of the data are too important to push Aussie in a more long-term perspective. CAD is again a main plan, as I mentioned previously, and right now, we are really waiting for Wednesday results. If you are flat, I would not suggest you to buy CAD now. You can get into it at a small retracement, but you have to get in either today or tomorrow. If you are not in on Wednesday, then it's best if you don't trade before that event. You can always get in at events, but at the event, it's very tricky because, as I mentioned, if the interest rate is hiked, you might have a very strong buy rumor sell fact effect. However, because the press conference is coming in 30 minutes, so we don't really know what kind of market, or I don't really know what kind of market movement we might see, because we might see people actually jumping because of the interest rate is hiked, and they expect a hawkish press conference, or vice versa. You might see people taking huge profit out of the market, and you see a huge drop in Canadian dollar, and people stay in the sideline waiting to get in after the press conference. So all this scenario can happen. So it's best, if you are not sure, it's best to stay out, and you can always let the price action tells you. So my best suggestion is don't jump in the trade if interest rate hiked. Just wait for 5 to 15 minutes. Wait, let the market quiet down. And really the best way is to trade the press conference. Don't trade the interest rate, because the money has already been made. People who wants to trade the interest rate decision, they will only use exit. Like me myself, I only gonna use the interest rate decision to exit my trade because I'm already in. I'm already in at the not a good level, but at least I still had 50 pips, 80 pips buffer right now. So if you're not in, really don't get in. Get in at the press conference. Swiss franc, don't have much to talk about for this currency. As I mentioned, the safe haven currency, only looking to trade with a risk on risk off event, and I always will prefer Japanese yen more than Swiss franc. Europe is really once again a rising start. Now last week we don't have any catalyst, and that's why we see kind of a profit taking at the beginning of the week. But once again, every time euro hits a strong support, it will pick up. So euro right now is very strong, fundamental, sentimentally. Now it is pretty much the strongest currency probably for 2017. Of course, everything can change. So don't take my words for it. You have to remain very dynamic in fundamental trading or in the whole microeconomics. But right now, it's the only currency that is very, very sure to the upside. Now, because it does not have catalyst this week, that means the price action, or you can say technical analysis, technical support and resistance, will be the main play for euro. So for lots of technically, you will find your technical support resistance become very very effective this week. So that's the thing about once again, don't think fundamental and technical are contradictory to each other. I think they are perfectly unison. You can always use them together. But understand, if you are a technical trader, sometimes say, hey, how come the support resistance don't work? They work, but they don't work when you have a very strong fundamental reason. Because market will always choose to focus on the fundamental side if we have a strong enough fundamental data. And if we don't, then that's the time that technical will work best. Excuse me. So for euro this week, I'm already in euro dollar, euro Aussie, really not looking to add, but I'm really looking to buy euro against a weaker currency. So for example, if UK employment data is very weak, euro pound will be the pair I'm looking forward to getting to it. If Bank of Canada disappoint the market, they does not raise the interest rate, or if the press conference is very negative, very dovish, then I will long euro CAD. Also, if the PPI or CPI is very negative for US, then I will long euro dollar. So basically, that's how it. I already, just beginning of the week, I already know which currency is the strong one, which one is the weak one. Then I will just pair up throughout the week in accordance with what's happening to the market. British pound, as mentioned, right now it's really dependent on this employment data. Now, personal bias, I am fundamentally weak. I think it's not looking well. Basically, things are not looking well for UK. But because Bank of England kept pushing the price, that kept giving this kind of hawkish comment. So we'll see what happened to this employment data. I do think this employment will be the last straw. That means if the employment data is negative, really, people or market is not going to buy into a hawkish Bank of England anymore. And first, if the data is actually very positive, then market might pause and reevaluate, because some people might think, hey, the data is good, employment data is good, average earning is good, maybe BOE really is going to raise interest rate. That we're going to think about. And then Japanese yen, same as Swiss franc, not looking to trade anything aside from the risk on risk of events. You could, of course, always buy dollar yen or euro yen or even Aussie yen just because the interest rate or the yield differences. But it's not how I trade the market. I'm just saying that if you don't have any catalyst going on, then most likely, Aussie yen will going up, dollar yen will going up, just because Japanese yen is a negative currency right now. but understand any political or geopolitical events can inject a lot of safe haven inflow for Japanese yen. New Zealand dollar is the same position as Australian, and we don't really have any catalyst going on. And right now, it's really just neutral, right? Because the fundamental data, the last one was the GDP, which again, it's positive, but it was lower than expected. And ever since that, New Zealand dollar has been very, very quiet. You don't see any comments from RBNZ. You don't have any major data point coming out. So it's a more neutral currency. It still have the fundamental strengths due to the high yield interest. But aside from that, it's basically you can use it to pair up with other currency. And that's why I'm short New Zealand CAD myself. Not because New Zealand is particularly weak, but because it's very, very strong. And I choose Aussie and New Zealand because three of the currency are all in the commodity category. That means I can hedge out the risk sentiment. US dollar, same thing. We will have to see what happened to the PPI. Now, NFP last week, let's take a look at that because that's very interesting. Last week, the NFP came out as right here, very positive headline figure. However, market again focused on the average hourly earning, which 0.2 is lower than the expected number. So that's pretty much the peak US dollar is that it's not weak. It's still the strongest currency due to the hiking cycle of Federal Reserve. The employment is great, and basically the fundamental picture looking well. But I understand market is in the speculative person. So if we don't have anything that's worthwhile for people to trade, it will just go to sideways movement. Market is always gonna trade expectation over the disappointment. And right now, we don't have anything to basically to make people excited again for US dollar. And that's why you see a lot of selling into US dollar. If you take a look at DAX, it was all this selling from 98 all the way down to 95.50 previously. And you have a little bit recovery all the way until 96.50, and now it's really just in a sideways movement. That's pretty much what happened to the US dollar. But this week, the PPI and the CPI will be interested because it was said, I do think it was said another round of buying or selling into US dollar. Now, which pair I choose, because the data comes out at the Thursday and Friday, we will have to be dynamic. But generally speaking, if I want to sell US dollar, I would choose euro, because euro dollar, euro is, as I mentioned, a strongest currency for now. If I want to buy US dollar, I might choose to short, but that will have to be confirmed after the UK employment data. The other pair you can do is the yen, because dollar yen have been on a steady uptrend. The problem is that it's already at a very, very high point. So that's pretty much it. That's pretty much my game plan for this week. So first, the existing trade, I am right now in euro dollar. So I'm starting at 130.44 right here last week. So as you can see, we have a drop here, and 113.44 is the 38% retracement. So I had a penny order here. I got filled. I was underwater for few hours, few days, actually 1 day, and then it went up to my way. But right now we are in a sideways movement because of the lack of catalyst. I don't know where this currency is gonna go. We still wasn't able to break above 114.50, and I am in break even right now, because without the catalyst, the price action might just keep going sideways, and the sideways movement might be huge. So I'm not interested to get into a trade, be in a drawdown. If I don't have any catalyst that I know can lift these things up, then I'd rather just wait to re-enter, because again, there's always opportunity. But it can break above 114.50, will be a very strong upside signal for euro dollar. Another long euro I have is euro Aussie, and as you can see, and I know it's very, very unclear, but as you can see, we are very clear as an up, higher high, higher low, higher high, higher low, another higher high, higher high, and we are hoping to reach this C point to give us another higher high. I got in again reasons because I'm bullish in euro and bearish in Aussie due to the the neutral RBA. Got in at 140, I think 48.88. This blue line here. That's where I'm getting sort of at this kind of this resistant place. This is more of no, this one is not the Fibonacci play. So I probably just getting, because the RBA was dovish, and I probably just getting at the breakout of this trend. So Eurozone is another trade I'm in. Already, I'm also break even, and same reason, because lack of catalyst. So I rather get stop out at break even. I don't want to be in a trade in a drawdown when there's nothing more to lift me up. So that's why I don't want to risk on that. Another one I mentioned, Aussie CAD, got in at 98.40. We are only 40 pips profit. I'm not at break even yet. I'm setting my stop loss at very clear resistance level. Not a break even yet, because we might have an upside movement, down movement against a fundamental trade. Because usually I don't get in the trade at such a low level. Right? It's not worthwhile to trade. But because of the events, so last week, I just don't think we are going to have any major retracement. So for me, I rather just this is a very special. That's how I trade it very dynamically. There's really no set strategy. So I got in at this low level against my technical background. It's just the event of Bank of Canada is coming up very, very soon. And I think we are going to have another round of buying CAD as a buying rumor setting fact. And that's why I got in and hoping that this week we might see another push down. So that's what I'm still hoping. Today is only Monday. I'm still hoping that tomorrow or Wednesday morning we might see another push down to 97.50. And if that's the case, I might just exit all there, or I might exit half, or I might stay to break even. Most likely I'll exit half, because I like to have some profit under my pocket. But I also want to leave a position for potential rate hike and initial movement. So I'll see what happens. New TCAT, same thing, got in at 94.40. Wait, is that the same? Oh no, this is 98.40. So I got in at 94.40 here. Right now at 93.67, again about 60 pips in profit. Still looking for a push down to 93. If we can hit there, I'm pretty much looking to exit at this exit half and re-access the market. That's pretty much for what I'm looking at. But again, like I said, it'll be a tricky event to trade. By the time interest rate is out, even if it's a hike, you are already at a very, very low point, and we are not sure what kind of price conference we might have. But most likely, I might just stay out waiting for a much major retracement to get into it. For euro, same thing as I mentioned. Another thing looking at is dollar yen or euro yen. Dollar yen, because of the interest rate differences, and because we do have the PPI coming up, you could. I don't think you can trade it, because it's just you're not at a very good level. And this risk event is not. I don't know if the PPI is going to be good or bad, right? So it's a 50-50 for me. So really, I don't want to trade into this kind of events. However, if the PPI is negative, then you have a downside movement in dollar yen. You might be able to buy at a retracement, just because dollar yen might still look into the upside. Another one is euro pound, looking to buy at the negative UK employment data. Once again, we might not have if we have employment data, I might jump in, because we still have the room to go. You see, if we buy at 80, or even if we buy at 90, we still have 200 pips of room to run. Oh, I'm sorry. This is daily. Oh, my bad. Okay. I'm actually looking for just give me 1 second. All right. Okay. Sorry. Now let's more accurate. All right. So if it's for actually we don't have much room to go because if we buy here, you only have about 30 pips. So not something I will jump in. But that means if you have a positive UK employment data, you might be able to buy at a retracement. That would be a much better strategy to buy euro pound. And the reason is because no matter how bullish pound might be, euro is still way more bullish, and pound still has a lot of underlying risk coming up. For example, their own Brexit still going on right now. So that's pretty much my game plan for this week. Let me take a look at the calendar. I do think we don't really have much coming up this week. That will be the game plan. What else I do usually is on Thursday and Friday. I usually also take a look at the next week calendar, and I'm looking for trade that I might be able to place into the weekend, trading for next week. Sometimes I do that. For example, next week you have monetary policy minute from Aussie. If you think that this minute will be a quite dovish event, you might into selling Aussie out of this. Now that's not what I'm gonna do because I don't have I don't have a probability for Aussie minute. It's not something I have a strong direction bias. But just give you this example that's something you might be able to do but that only happen if you see market getting very excited on something that's about to happen, like this ECB press conference. So the recent hawkish comment from Draghi, market will price in euro for next week. Okay, that's the obvious trade. So the minimum bid rate is not gonna change, but the press conference, market will think it's gonna be more hawkish. That means we will see another round of euro buying from Monday all the way until Thursday for next week. That means for this getting to euro at any good retracement level for whatever pair you can get euro pound, euro dollar, or euro Aussie, or even euro New Zealand, right? Whatever you get your hands on. Euro yen is a very high point. Take like a euro New Zealand. If you can do that this week, if you see any drop in euro dollar, you could get into it and trade into next Thursday's ECB press conference. Now that's a very good event. That's what I'm gonna do. Just by speaking to you, I think that's a pretty good strategy. I'm looking, but of course I need some really strong retracement for this week coming up. Okay, so that's just an example. You can trade into a risk events. And I think that's it. And so Monday again very quiet. Tomorrow I do think it's gonna be another quiet day, and really things will start getting excited on Wednesday, all the way until Friday. So we'll see what happened. I will update you on my Twitter account. If I have a change in the market direction. And just again, even if you don't understand, or even if you don't trade fundamental data, if you are in CAD trade, just very, very careful because of the Bank of Canada decision for this Wednesday. So if you are in CAD trade, just watch out. Okay, basically that's it. Now, if you to attend this kind of events live, just let me know. Email me, or if you have any question, email me. I'll be more than happy to help you out. Otherwise, I will see you next week for another weekly analysis. Okay, thank you very much. Thanks for watching. Bye bye.